You have gone for GST audit. What will you examine and what will be the objective?
You will examine that whether the invoices that are raised
Your object of audit is only two things. Number one, tax liability. Whatever taxes have been paid, whether those are correct or not. And number two, input tax credit. Basic object of the audit. Whatever taxes have been paid by the person, whether those are correct or not. And what ITC has been claimed by the person, that is correct or not. Right? So for claiming the ITC, what is required? Inward supplies. Right? For computation of the tax liability, this is outward supply plus reverse charges if applicable, right? And what is being supplied? In case of goods, whether you are supplying as it is what you procured or there is any process of manufacture. If there is a manufacture, keep a record of that as well. In nutshell, there is a complete chain of relations. Goods, services received, used in the course or furtherance of business, credit taken. There is one part. Then those are used for outward supplies. There is another part. Good. When you supply outwards, then invoice, value, quantity, rate of tax, amount of tax. That we have already seen what is required to be there in the invoice. Everything is needed. What for? For cross verification. For cross verification that what you have shown as an input tax credit and what you have shown as an output tax liability, there is a matching and the difference is in your stock. If it is not in your stock, the presumption is these are deemed to have been supplied. Suppose you say you have purchased 1 ton of material. Good enough. Take the credit for 1 ton. Right? But this credit will be based on what your supplier has furnished in his return. He tells you, or rather he has informed the government that I have supplied 900 kgs. You are claiming 1 ton. Initially you can take credit for 1 ton. But if it doesn't match with the information provided by your supplier, you will have to make the reversal along with interest. First cross check. Now, out of 900 kg of the input received, you are showing that 500 kg already supplied outwards. Pay the tax for that 500 first. Then the next question, whether you have 400 kg in stock. If not, then where is that? It is deemed to have been supplied. Pay tax on that as well. Now, for some reason you say that this is the place where I generally store the goods, but for some reason I have stored at some other place. Not acceptable. Either register that place also Alternatively, it will be treated as if the goods have been supplied. So, object of your audit is going to be the tax liability has been computed correctly and discharged. And number 2, input tax credit has been taken correctly or not. Only these 2 objects are there. Right. So, what all you will need for the purpose of audit? You are already aware of what all documents will be needed for the purpose of your verification. And you are verifying only the facts what has been furnished by the client. Right. He tells you he has paid 10 lakhs rupees of a tax, you accept yes, you have paid 10 lakhs. But how come you have computed the liability of 10 lakhs that I have to verify? Right or wrong, that I will inform to you as well. Right. You say, I have taken the credit of 10 lakhs, good enough. Show me the documents on the basis of which you have taken the credit of 10 lakhs. Got it? So, the objective is only 2. Number 1, verification of the tax liability, outward tax liability, including reverse tax liability. And number 2, input tax credit. And for that purpose, whatever records are required, all that we are going to discuss here. Very simple provisions, and that's why